In a world increasingly dominated by digital currencies and financial uncertainty, one asset continues to stand the test of time: gold. Today, we're going to explore why gold remains not just relevant, but crucial for protecting wealth in our rapidly changing financial landscape. Let's start with something fundamental that sets gold apart from every other financial asset: its complete independence from the financial system. When you hold physical gold, you're holding real wealth that doesn't depend on anyone else's promises or performance. This is what financial experts call zero counterparty risk. Think about your bank account for a moment. That money isn't actually sitting in a vault. It's a promise from your bank to pay you. Your stocks, bonds, and even cryptocurrencies all depend on complex systems and other parties fulfilling their obligations. But gold, its value isn't someone else's liability. It's real, tangible wealth you can hold in your hands. Speaking of cryptocurrencies, let's address the elephant in the room: the recent crypto market disasters. The collapse of FTX wasn't just a wake-up call, it was a stark reminder of the risks inherent in digital assets. Billions in customer funds vanished overnight, not because the technology failed, but because these digital assets ultimately relied on human trustees who proved untrustworthy. But here's what's really fascinating. While crypto markets have been turbulent, central banks around the world have been quietly accumulating gold at record rates. In fact, central bank gold buying has reached levels not seen in half a century. These institutions, which literally create money, are choosing to hold gold instead of other assets. Why? Because they understand something crucial about the future of money. And this brings us to one of the most important developments in modern finance: central bank digital currencies, or CBDCs. These new forms of money are being marketed as the future of finance, but they represent something potentially concerning: complete financial surveillance and control. With CBDCs, every transaction you make could be monitored, approved, or denied. Your money could be programmed to only work in certain ways or expire after a certain time. Gold, by contrast, operates entirely outside this system of control. It's private, portable, and can't be digitally frozen or confiscated with the push of a button. This independence from digital systems and government control is becoming increasingly valuable in our interconnected world. Let's look at some numbers that tell an important story about gold's stability. An ounce of gold could buy a high-quality men's suit in 1920. Remarkably, it still can today. Meanwhile, the US dollar has lost over 96% of its purchasing power in the same period. This isn't just about investment returns, it's about preserving wealth across generations. The global economic situation makes this particularly relevant right now. The global yield curve is currently experiencing one of its deepest inversions in modern history, a reliable predictor of economic downturns. Throughout history, gold has served as a refuge during such periods of economic uncertainty. It's not just about making money, it's about not losing it when traditional financial systems face challenges. Here's something else to consider: the rise of cryptocurrencies might have inadvertently paved the way for CBDCs. We've become increasingly comfortable with digital-only money, making the transition to CBDCs seem more natural. While private cryptocurrencies face increasing scrutiny and regulation, CBDCs are being positioned as the safe alternative. But remember, unlike gold, both crypto and CBDCs require electricity, internet access, and third-party validation to function. Gold's appeal isn't just financial, it's practical. Unlike cryptocurrencies or fiat money, gold's demand spans multiple sectors: jewelry, technology, medicine, and investment. This diversified demand creates a natural floor for its value. Even if one sector's demand decreases, others typically remain stable or increase. This multifaceted utility has been true for thousands of years and continues to expand with new technological applications. When we talk about gold, we're really talking about building a financial arsenal, a form of wealth insurance that has stood the test of time. While cryptocurrencies and digital assets might offer opportunities for growth, gold offers something different: certainty. You don't need to convert all your wealth to gold, but having a portion of your savings in physical gold provides protection against both traditional and modern financial risks. Consider this: throughout history, gold has survived the collapse of countless governments, currencies, and financial systems. It has maintained its value through wars, depressions, and technological revolutions. In an age where digital assets can disappear with a server failure and currencies can be devalued by government decree, gold's physical, tangible nature becomes even more valuable. The world is moving rapidly toward an increasingly digital and controlled financial system. While this brings convenience, it also brings unprecedented risks and potential for control. Gold stands as one of the few assets that exists completely outside this system while maintaining its value and utility. Remember, gold isn't just another investment option, it's a time-tested way to preserve wealth across generations. While digital assets and currencies have their place, nothing quite matches gold's combination of privacy, security, and stability. In a world of increasing financial uncertainty and digital control, these qualities aren't just valuable, they're essential. The choice between digital and physical assets isn't binary. There's room for both in a well-planned financial strategy. However, understanding gold's unique properties and its role in preserving wealth becomes increasingly important as we navigate through these unprecedented financial times. Whether it's protection against inflation, a hedge against digital risks, or simply a way to maintain financial privacy, gold continues to serve as a cornerstone of wealth preservation in an ever-changing world. Looking ahead, the push toward digital currencies and increased financial control systems might actually enhance gold's value proposition rather than diminish it. As one of the few assets that can truly be owned without counterparty risk and controlled without digital authorization, gold's role as a store of value and symbol of financial independence may become more important than ever.